Thank you, Ashish ji. So, small correction. Sa-Dhan covers all MFIs. It's not that NBFC MFIs are not excluded. Interesting thing is that we have more NBFC MFI as members than MFIN. And of course, we coordinate with them on many of the issues. As
Right,
you
sir,
said,
right.
yeah, as you said, we have the entire totality of the sector with us. So I will start off with that. As of when we brought out the microfinance directory last year, we had a total of 235 MFIs in the country. Of that, 90 are NBFC MFIs, and the remaining are of various legal forms like societies, cooperatives, mutuals, and all. So it means that though the industry has a larger part is with the for-profit NBFC MFI sector, we have a large number of small institutions which work in remote areas, which work in localized areas, and which cater to the really needy and the poor. So we look at the entire picture of the sector as a whole. Then coming to the MFI sector as a whole, what we have to say, Sirish has shared the data of the entire sector as of June 21. I don't want to go into that. But the interesting fact is that from 2015 onwards, there is a structural change in the sense that pure MFI's proportion of the entire portfolio has gradually started coming down, and other players are increasing their share of the sector. So if you look at even the latest data, the MFIs as such account for just about 35%. And of course, quarter to quarter, it varies from 32% to 38% and all. The remaining a large part is catered to by banks, small finance banks, and also pure NBFCs. So it means that the sector itself has undergone a change, and increasingly the mainstream banking sector, which includes both banks as well as SFBs, are showing an increasing interest in the microfinance sector, which is anyhow good because ultimately we want, as Dr. Sahu is also here, RBI always says that ultimately everyone has to be provided by a mainstream financial institution. So that is a good transition, and we all should be happy about the interest being taken by the banks to cater to the microfinance segment of their businesses, and we only expect it to further stabilize and grow. And apart from that, what we have to say is that in the microfinance sector, a natural transition is happening. RBI has opened a space for the bigger institutions to transform into small finance banks. Now the licenses are available on tap. Personally, my thinking is that once an NBFC MFI reaches a AUM of around 10,000 crores, it should look at transforming itself into a small finance bank. Because when when your portfolio is large and when your client outreach is also large, then even Reserve Bank should feel that it has to come into a regular mainstream regulatory framework. So that's something which I think every MFI which is growing has to plan that at certain stage that I will transform into a mainstream banking institution, probably SFB first and then even a universal bank later. So that's, I think, the scenario which we will increasingly see in the microfinance sector. But at the same time, it doesn't mean that pure MFIs will go into existence, go out of existence. And to cater to the smaller areas, to cater to the localized population, and also to cater to even the more poorer sections, small institutions will be growing up, will be coming. and also will transit, and we have a good example of Satya before us. Satya came into existence after I came to Sa-Dhan. So that itself, in the short period, they have shown that how a new entity can be created and how it can prosper and grow. That's a good example for other, I would say, startup entrepreneurs in the microfinance sector. And it can happen in other types of MFIs also, not just for profit. Even there is a scope for growth in the not-for-profit MFIs because we have a good framework for such growth. And now when we come to the growth prospects of the sector, before that, of course, both Pandaji and Mishra have mentioned about the effect of COVID. COVID has certainly impacted the lives and livelihoods of the microfinance borrowers. The first phase, the impact was more on the income generation and livelihoods and less on the health and the actual lives part of the borrowers. In the second wave, the more impact was on the families and their lives, slightly lesser impact on the income generation and the livelihoods. That's what we, and main reason for that is a slightly softer lockdown as far as the second wave is concerned. And as we have seen, March, when the sector closed, we still had a growth of around 17% on the outstandings. So that itself shows that the sector has taken the COVID in its stride and come back. But the loss of income generation and livelihoods for a certain section of the borrowers of the microfinance institutions has been real, and that has an impact on the balance sheets of the institutions in the sector also, in terms of increased provisions and higher levels of PAR and NPA, as we have seen in March and we have also seen in June. But overall, we are looking at, because the August and September information from the field gives us a lot of scope for what we can say optimism in terms of increased disbursements as well as increased level of recoveries. And we do not expect, even if the third wave is there, the impact should be not much on the income generation, because we have a larger proportion of vaccinated people, and microfinance sector, MFIs themselves are taking a lot of lead in vaccination and taking the message of health and protection to their borrowers and to their neighbors of the borrowers. So in that way, we are quite optimistic going ahead, and the way we will be able to close this financial year also with a reasonable growth compared to 2021. And what I feel is that even if we take the banking sector apart from the entire microfinance scenario, I would expect a regular steady growth around 15% year on year for the sector, even going ahead. That optimism is based on the fact that if you look at, we look at the analysis of the district level data and all, we feel that there, of all the 600 odd districts, there are just about 75 districts where the penetration levels in terms of catering to the credit needs has reached more than 75%. That means there's still around 500 odd districts where penetration levels are below 75%, and there is a scope. But only thing is, the sector will have to look at difficult geographies. They will have to go from bigger towns to smaller areas. So in that way, potential for the growth of the sector is always there. And at the same time, when you look in terms of the scenario of new Reserve Bank regulations and all, there is a role for greater surveillance and supervision from self-regulatory organizations, both Sa-Dhan as well as MFIN, and reporting back any violations with regard to the norms you are mentioning about the fair practices code. The sector itself has its own code of conduct with regard to all aspects, and having a suitable grievance redressal mechanism for the clients. These are the important things, and the customer is the focus as far as the microfinance sector is concerned. And my previous speakers have also said that those institutions which have been able to maintain their customer connect were able to come back very quickly and start their operations. So even in terms of the regulators' expectation is that the focus point of all the institutions and all these organizations is ultimately the poor woman who is the borrower of the microfinance institutions. So unless if her concerns and if her issues are taken care of, the sector can prosper and grow. One point I wanted to add before ending, like other sector, microfinance sector also has to have some support for the startups in the sector, because we talk in terms of startups in all other sector. There is a need for a lot of patient capital for the smaller institutions. Of course, this has to be taken care of a lot by SIDBI institutions like SIDBI and NABARD. They have played a role in nurturing the sector 20 years back, and they have to play the role again now, nurturing the what I would say the new wave and new type of microfinance institutions, which have to take the place when the bigger ones transit into SFBs and universal banks. Thank you.
Thank you, sir. Thank you very much. I think you have given very good message. You are aspiring to become the small finance bank, then at least you should reach 10,000 crore of size. It may be a good idea or maybe the right time to approach to the regulator for the license. That is one good part which you have, I think, given to the industry. Other than that, you have highlighted the issues and the opportunities also for the industry. Sir, I think one thing which you like to also understand from you, this is related to the guarantee scheme. So, what do you think that this scheme is sufficient for the industry, or do you need more, or what is your thought process? Because a lot of banks people are also here, and RBI representation is also here in this discussion. So it will help.
So, as far as the credit guarantee scheme, we have seen initially in last year, government came with the extended partial credit guarantee scheme, but that was only guaranteeing the issue of investment grade paper and bonds by the MFIs. It was not guaranteeing the term loans. In that way, this 7,500 crore credit guarantee scheme is quite a good development. And from the side of the government, they have made it very easily operatable with the National Credit Guarantee Trustee company taking care of the guarantee part without any guarantee fee, and even the government insisting that at least 50% of the sanctions from the bank should be for the lesser rated and graded MFIs. That's some relief for smaller and medium level MFIs. But only some issues which MFIs have raised, and we have taken up those with the government of India also. These are issues not from the government side as to the design, but these are issues which some of the conditionalities which the banks are imposing when they are sanctioning the loans under the credit guarantee scheme, because the guarantee covers 75%, and like in normal course, again, many banks are insisting for a 10%, 15% FDR as a collateral, which again increase the costs of credit for the MFIs. And because there is a cap of less than 2% than the RBI's cap. So whatever they ultimately lend to the borrowers, it has to be within that. It creates a problem for that in terms of margin for the MFIs, because when you are keeping an FD of 15% of the loan amount with the bank as a collateral, that has its own cost. And at the same time, some banks are asking again for a personal guarantee of the chief executives and the promoters. That is really a ludicrous thing, because when the guarantee is being assured by the government, again asking for a separate personal guarantee is something unheard of. And with regard to the assignment of book debts, some banks are asking for 100 to 125% of the total loan, because this is a separate loan, because and it this whatever is given under the guarantee scheme has its own features. So it can't be, even if you want to assign, an MFI can't assign more than 100%. It has to be less than that. So these are some of the issues which are arising from the side of the some of the banks. So that is already under the attention of the Department of Financial Services. We hope that they will be able to advise the banks on those issues. Except for that, I would say that the scheme in its design is quite good, and it's that itself shows the what we can say, the interest of the government in supporting the microfinance sector, and the sector has been quite thankful to the Honorable Finance Minister for coming out with this scheme.